Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, May 29th. Michael Boutros here with you this morning. Kelly, Mark, Peter, Pete, and Peter are all here. Tom, always a pleasure. Jay, great to see you as well. So, interesting start to the week, okay? Dollar obviously making another stretch higher. We were trying to see this thing start to hold some resistance since the end of last week. We got stopped out of the Swissy trade, obviously an overnight trade. I'm not currently holding anything on Aussie, but I still think there's hope there. But at the end of the day, we have to take what the market gives us. So obviously there's some headlines that have been circulating, whether it was North Korea summit that's on, then it's off, now it's on again. The headlines with what's going on in Italy and the possibility for yet another election on the back of the failure to form a government there. So there's some headlines that are prompting some risk on movements. Dollar yen trade that we're in on the swing side still looks good. But we will cover today on the menu. Let's jump right into it. Obviously, we'll take a quick glance at the DXY. Aussie and Swissy are still the $2 crosses that are interest of me, or for me. Sterling dollar also is dipping down again below support, but on a slope basis, still looks kind of interesting. Do want to talk about the sell-off in crude prices, turning from a pretty huge resistance, weekly resistance, that we've been noting on the weekly charts. Couldn't get a close above it again last week, and we made an outside weekly reversal candle off resistance. That's pretty bearish on crude. So could see some near-term rebound in crude prices, but I do think we head lower there. Again, we'll talk about sterling. Peter was asking about Euro Oz. We'll take a look at that. And someone here was asking about sterling Oz. Was that you too, Pete? We highlighted that one in the intraday webinar and intraday updates last week. So we'll take a look at that setup as well. All right. So if you have any other questions or trade setups you guys want to review, as always, feel free to throw them on the message board at any time. First things first, here's DXY. So 94.20 was the line in the sand. There's a lot of different reasons for that. On the weekly charts, it highlighted the 38.2 retracement of the decline from 2017 highs, I should say. You had 2016 low week reversal close. You had the median line. It was all right there. And in fact, last week, we basically closed there. We probed a little bit through, but to me, it looked like a decent area where we should start to look for some kickback. Here we are with those risk off, quote unquote, flows. Start of the week, gaps lower, and here we are punching through. We even tested as support before moving higher. So look, guys, on whole, we still have to treat this as an objective trade setup. And Peter's saying no, not me. Okay, I think it was someone else, Pete. Pound Oz, if you're in the room, remind me. But for the DXY, look, the same problems that we had on the approach and break subsequent 92.50 is the same issue I'm having now. Okay, how do you buy a breakout that's, what, 6%, 6.5% off the lows already? That's at fresh yearly highs. That has broken structural resistance, but near term, you don't really have much to look for. And the answer is we can't chase it, period. We're still taking every trade's on its own merits, but this is a big break. Momentum is in overbought, deep in overbought. And remember, that condition can stay constant for an indefinite time period. So trying to fight this is a fool's errand above 94.20, in my humble opinion. And the DXY doesn't really leave much as far as opportunities to actually trade the index. Now, again, every trade on its own merits, and the crosses do look interesting, but here's the intraday chart. Okay, now, call that what you will. Momentum still looks pretty healthy in that you haven't really seen much probing below 50 even. And here's the breakout. Okay, so 95.15 is a soft target. Near-term support, look right back at former resistance, 94.20. Break to the upside beyond 95.15. There's really nothing on tap until 96, and that's the 50% retracement. So it's going to be an interesting week. Keep in mind a couple of things, guys. You're just coming online with full market participation today. Once 9:30 kicks on, you get the open of U.S. markets, which were closed yesterday for Memorial Day. We'll see that full market participation start to come back. Also, keep in mind, we only have 2 days of trading left for the month. So certainly, those end of month flows can really play some wicked intraday price action. So, from here on out into the close of the week, we'll probably be trading half leverage. on an intraday or intra-week positioning that we're taking, but it's much more nimble, right? Also keeping in mind that for all of the trades that we've been following where the monthly opening range broke, whether it be euro or whether it be sterling, all of these trades that have a monthly opening range break that's given a clear directional bias, you're looking for that stretch low or stretch high into the close of the month, right? So over the next 4 days, again, is another reason why, particularly specifically right now, you don't really want to be getting aggressive, pressing the trade in the directions that the breakouts have played out. So just a note of caution there. Again, near-term targets, keep in mind 94.20 support, a break above 95.15. Like I said, there's really nothing until you get up into the 96 handle. Okay, if we break this descending channel, it would be a start. Okay, it would need to be some pretty convincing price action to try shorting the dollar, but until that stands, until we're in the uptrend, until we're not. Cliche is a cliche, but truth nonetheless. Any questions on the index? Probably the boringest of the lot that we'll cover today, but it's important to keep in mind where we are. So, I guess a quick circle back to euro. I haven't been trading this one, but I highlighted it a couple of days ago. I told you right off the bat, this is a low conviction setup, just because, again, this was one of those trades where you're probing key support, it's trading below key support, but you're still looking for the exhaustion trade, right? The descending channel that we in that parallel was really clean, touch, touch, touch. One more dump into here would have been a nice divergent play maybe for a long play. Well, didn't materialize. Here's euro now. And here's actually, just to give you a quick reference, where the daily charts look like, right? This was that huge pocket of support that we were looking for between 116, 116.60. Here's euro now. Okay, start up on the weekly charts first. Again, to show you why we were looking to fade that strength right here, or that strength in the dollar, that weakness in the euro, 117.09 to 116.62. We talked about that region. That's the low week reversal close for November. And 38.2 retracement slope. Didn't do much, right? We pushed right through. Another reason why I can't chase dollar long, euro short. We're now testing the November lows. And again, there's the median line for the broader formation we've been following from 2015. Now, it's the weekly close that matters here, right? We always stress that on the weekly charts when we're doing this broader analysis. So intra-week, we still could see a drop towards 114.30. Okay, it really matters where we close the week, but certainly below this region is danger zone, right, for the euro. Here's euro dollar on the daily chart. What do you do with that? You chasing that lower? Well, I can't do that right now. There's no really to put a stop. Are you trying to buy the turn and call the low? Well, good luck with that, right? You're still deep in oversold territory, and major support, or the next level of interest, at least on the near term, doesn't come into 114.95, 114.48. Hey, George says, hey, Mike, on the daily, it's also sitting on a trend line from the 2017 lows. So I'm not sure what price feed you're working with, George, but if I were to connect those trend lines, it does give us a near-term point right there. You're absolutely right. But George, here's the one thing I always just want to remind you, right? Want to keep something in account always when you're looking at these daily charts. 2 points is reference, 3 points is confirmed. So 2 points on this, I would be watching this trend line, sure, right? Absolutely, it's there. We haven't closed below it on a daily basis, so it still could be in play, but it is a speculative trend line. If I had another third reference point, or maybe a parallel that could give us some tell on this, it might tell me that the gradient is significant, but I don't see anything here just yet to scream out. Nonetheless, it's something to keep an eye on, right, George? I just want to give you a little note of caution there. He says that is correct. Let's see if the third one holds. Yeah, I mean, if today specifically, Jorge, we get a hold here, we get some sort of reversal break back above 116.60 for me, yeah, I'd be trying to play the long side there for sure. Okay, but just keep in mind, again, the monthly opening, here's the monthly open. If we count that as a monthly opening range break, you're looking for that late month low, it's pretty darn late in the month. Intraday, here's euro. Very precarious, okay? We gave you the downside break targets of 116.16. We gave you the first one on 115.53. That got taken out. The second one on 114.95. You saw it in the daily chart. We turned just ahead of it, right? The low came just above the 115 handle. So on the stretch to the upside, if 116.16 holds as resistance, I still would count that last dip towards 114.48, 114.95, that region there. But again, it's trying to chase something that's pretty stretched. And you look at euro dollar exposure, guys, for example, right? Whether it's COT data or I have access to, IG's client base, you're seeing a huge run up. Okay, clients are now more long euro than they've been in, I don't know, nearly 8 months. Okay, ratios at 1.62. So for every one trader that's short, there's 1.62 that's long. So it seems like every Tom, Dick, and Harry is long already, and it's so hard for me to really try to get, comfortable with any type of major reversal until we see that start to come off a little bit. I think that'll give us a tell that we're seeing that shift in sentiment. Till that happens, guys, for the euro specifically, I think you have to be patient, kind of sit this one out. Okay. Good point there, George. Keep an eye on that trend line. The daily close is what's going to matter for that one. But generally speaking, you need to see some sort of recovery rather above 116.16 to get this thing going. Any questions on euro? Number 2. All right, let's jump into Aussie. Here's what my dearest Aussie looks like. So this one's been, I can't really complain. It's giving us a deeper pullback than we wanted, but we grabbed 100 and some odd pips off this last week. Really nice rally into a 76 on the pullback again, offer an opportunity to get long again. And here we are yet again holding back in another consolidation. Recall from the May high that we started to get into this consolidation and we waited for the break. That's what gave us the upside stretch into 76. Here we are again. Consolidation. Now, this break that we made last night took us into last week's open. 75.20 was my line, was my line in the sand that I told you guys last night. If this is going to hold, not so much because it's last week's open, but it's also the swing lows and basic trendline support, right? 2-point touch here, George. So we don't know if the third one's going to give us much, but it converges on that open. So here's what Aussie looks like now. I mean, it's not completely out of the realm possibility that this thing could still work, but we did correct and make 100% extension, and that's my concern. Here's Aussie. First of all, why we're trying to get long Aussie, why we've been playing the long side of Aussie. 74.80 was a huge level. 50% retracement, median line convergence. We made a doji, okay, right off that low, a weekly doji. Ever since then, it went to consolidation, and that's the consolidation break that we played last week. Weekly resistance still is at 76.36 by my estimates. Okay. Key support obviously still 74.80. This is the range that you're playing in for Oz. Now daily looks like this. There's that 74.80 level. Again, we straddled it for a while. We didn't touch it, but we noted there was strong divergence into that drop. The consolidation break finally gave out last week. There was the stretch. And this is my concern. In Elliott wave theory, typically your correction waves, your 3-wave ABC patterns are typically 2 equal legs off the low before you see resumption. I hope that's not the play here. I don't think it is per se. And we were expecting a pullback, but I really did want to see 75.28, the monthly open hold, 75.20 on the intraday charts. I'll show you in a moment. Why this may still work. Former trigger resistance, kind of sitting on that right now as support. And again, you're still maintaining monthly open. We need to see a close today above this to continue to favor any type of long structure on this. Intraday looks like this. So we had this formation that we added last week, okay? It converged on the 100% extension. That was the target that we took out 3/4 of the position. Again, we got stopped out at the last quarter on the pullback, offered another opportunity to get long here, and here we are again, got stopped out break even. Last stop is right here. This is last rather stop where this thing should hold if we are moving higher in Aussie. You can see that the momentum is right at 40. So look, it's make or break here. I don't have any positions on this. If we get a decent rebound, we make it back through the weekly open, 75.50s, that would be encouraging. Obviously, a parallel breach would put us right back on target, 76, 76.36, and 76.60. Now, keeping in mind that the measured move of the perceived head and shoulders pattern that we looked at yesterday does target 77. Again, take it for what it's worth, but that would be the objective measured move. So I want to see this thing hold. Above near term 75.20, I'm going to continue to favor that this thing at least gives us another bounce from here. If we break there, 74.80 that's the big level, okay, that we noted on the weekly and daily charts. Sort of your last ditch effort. I wouldn't be doing anything here if it breaks. You'd need to see some sort of strong reaction before you start to attack this on the long side. Dollar's just ripping. So we don't want to stand in front of a freight train per se with a stop sign, right? Questions on Aussie? I've still been kind of glued to this pair. Worked out for us real well last week. Took a couple of break evens on the second attempts, but still looking pretty decent. Even the embedded channel, you know what I mean, could still be what's holding this thing up. We'll have to see how we look. Remember, U.S. markets are just coming online for the first time this week today after an extended break. See how things pan out. Okay, that's number 3. Number 4, Swissy. Oh, Swissy. So it's a slow burner, and it worked out well to the effect that it just missed that 98.82 target by just a couple pips. The low here was 98.86, 85.6 to be exact. So we kind of turned there late last week before kind of rebounding. This looked interesting. Okay, I thought we were going to get that final drop into the lower parallel. Remember, the big level we were looking for was 98.50 for a possible long position. Big level there, former swing highs. You have trendline support, a basic 236 retracement, downtrend support. You name it, it's there. At the end of the day, there's the break. As I noted in yesterday's update on Swissy, okay, kind of wanted to see resistance hold at 99.65, 99.71 if this is going to work. So what is this? Well, take it to a 30-minute chart. You did not yet get a close above it. So, I'm starting to think maybe this is an exhaustion play, false break of resistance, whatever you want to call it. You're not really getting much of a divergent signal, but certainly price action is pretty whiplash-like towards the high. Sorry about that. Just reading some of these comments here. So for me, I'm still looking for possible exhaustion here too. Aussie and Swiss are the ones that I've been focused on the most since the start of the week on this press with the dollar running higher because they were the cleanest on the way down. So on this pullback, if the structure is going to hold, you kind of want to see 99.71 limit this high. Okay. Now remember, guys, all this geopolitical event risk that keeps coming out, you're going to get these spikes and run through resistance, false breaks of resistance, false breaks of support. The closes are really what we need to be paying attention to, and specifically on a daily close basis to validate a clear break of resistance or support. So early in the session, let's see how U.S. markets come online to start off the week. But dollar looks like it's just stretching towards the highs. Nothing would make me happier than to see this thing kind of maybe spike into 95.15 or even from here, just start to kind of collapse through. Again, 94.20 would be that level that would give us the suggestion that maybe, in fact, a more significant high is in place. Okay, so Swissy. Any questions on Swissy? A quick look just to remind you what Swissy looks like from the daily charts and the weekly charts. You have them both set from last night's update, but 99.91 would be a basic 618 of the stretch to the downside. That converges on basic slope resistance there as well. So from a weekly or from a daily standpoint, that's kind of what you're looking at as far as the possibility for Swissy, basic 618 range, 3-point touch, right? So George, this would be an example of a 3-point touch, a little bit more conviction. That confluences really tomorrow, right at 99.91. So that'd be another level I'd be looking at for a possible reaction. Questions on Swissy? He says you beat me to that comment. George, good stuff. All right. I'll grant you things are kind of messy, guys, into the close of the month, but so is to be expected with these extended holiday breaks and so much event risk on tap with this geopolitical stuff. So that's Swissy, number 4. Number 5, Aussie Key, another one that we've been following, excuse me, since last week. I gave you an update on this last night as well as we were breaking down. So last week, if you remember, the update I think was on the 20th actually. We were talking about it. If you go to that update, it's funny because the chart looks almost identical in that we were looking at that 76.4% retracement 109.34 as resistance. And we were favoring selling rallies into this to play the Aussie pullback. Now, remember, when we had published this, we were already long Aussie. So we kind of wanted to play or look for an opportunity for sort of a synthetic hedge. So in the event that the Aussie pulls back, where's the best shot for us to get some short Aussie exposure, right? To hedge some of that. So, we made another run up into 109.34, but that's, basically the level that we're trading off still. There's 109.47, put the 786 retracement instead of the 764, gave us that exact high. Last pierce on Friday, here's the pullback. 108.90 was the level that we talked about in the webinar on Thursday. Last dot is right here at 108.50. This is the key support structure. And a drop into here, in my opinion, would give us a long opportunity to get a long position on. But first things first, last night we came right into 109.50 and we literally bottom ticked it and bounced right off it. So here's Aussie Kiwi now. There's that drop yesterday into 109.50. So if you're holding shorts or if you're looking for fresh shorts, first of all, hold up. If you're looking for shorts, you should have taken something off here. If you get through 108.90, excuse me, I'd get concerned that you're getting a larger bounce here. So I wouldn't want to be holding anything short above this region per se. I do think you're going to get a little bit of a bounce higher, and then we look for structure on the downside move. Maybe something like this. Now, ultimately, we do want to buy a larger decline in this, in my humble opinion. But the question is, do you correct lower first, or do you kind of just plow through the highs? Again, with what Aussie's doing, specifically with what Kiwi's doing, Kiwi's actually one of the one of the worst performers also against the dollar. So you saw that down just from yesterday, 0.36%. The worst performer is the euro, down 0.58, as you can see, obviously in the index. But an interesting pair we'll continue to watch. No change to any of the levels from yesterday. Okay, it's pretty clean. I don't want to start working with this slope too aggressively yet, guys, because we haven't really seen any inflection points. I mean, maybe the 50 line here, but I just wanted to drop that in for reference. The point being, you're basically still looking for possibility for a weaker move lower in Aussie Kiwi well below the weekly open. Questions on Aussie Key? All right, so number 6, so crude prices, right? Everyone's been all about the talk of the town with what's going on in crude. It's really interesting because, during my time out in Australia, crude prices were just ripping, right? And I showed them this chart, and with a grain of salt, obviously, this kind of long-term analysis kind of takes a little bit to manifest itself. You guys have all seen this chart here on SB for months. You guys know that we've been working with the 2009 analog and price. We were talking about how that analog, as we were heading into 71.30, 70.42, this 90-cent range, you had the median line, you had a 50% retracement from the 2011 highs, you had a 100% extension, 2 equal legs up from the 2016 advance. Both of those converge right here. And as price was getting into here, we were getting a lot of interesting commentary. I met with some clients out there that were very, very heavy crude traders, and the level of of bullishness is just through the moon. And guys, no one's saying this is not in a bullish trade or a bullish trend, but knowing direction's only 50%. You have guys with massive entries on long positions from 70 or above. That's just not good positioning. Where is your stop on that? Anyway, long story short, look, last week, obviously 70.42 into 70.32, we did not get a convincing weekly close above. Here's what it looks like on a line chart. Doesn't get much cleaner than that. Even if you take it on a bar by bar close, the high close was actually 71.33. So it topped it by a cent on that weekly close for the week of the 14th. Grant me a cent allowance. There is an outside weekly reversal off the highs. And the initial area of support that we had highlighted, 66.62, already being tagged as support. Okay, here's the previous update for crude, was on the 15th. This was that big region. We popped through, couldn't hit 73 really, turned just ahead of it. And then we collapsed lower. Fast forward. Here's the collapse. So anyway, what I wanted to show you real quick before we move to the intraday charts is if we take that analog and put it back into play, is this back in play? We don't know still, right? It's too early to tell whether this is actually still going to actually match up, but it does call for the next week or so, next 2 weeks, to see further losses and a possible pullback to at least the lower median line parallel. Near-term support, you're still looking at daily support at 66.62, or weekly support rather, so you could get some consolidation here. But below 71.30, that's the risk. Okay, that's the risk for a deeper pullback. Crude on the daily chart. Looks like this. So that big turnaround, first of all, we did take a quick gander at this last week, right? If you take a parallel of this slope and connect it to these highs, pretty darn close, pretty darn close, right? So even if we take some basic parallel analysis, it does suggest that, yeah, it's a decent area for it to turn. There's the pullback. This is the break of the median line for the formation we've been following off the lows, and the monthly open. Okay, and the monthly open comes in at 68.56. That's your now new near-term resistance. 68.56, I'd also put as near-term bearish invalidation. On the stretch to the downside, this is the sweet spot I'm still looking for. You got the 100-day moving average, basic slope support from just this year's lows. Again, George, if we're going to drill home the idea, 1 point, 2 point, 3 point. Okay, so 3 point confirmed, converges just lower, right around 65 and change to the downside here in price. Really nice support triggering momentum too, right? Just a clean move in crude. And I know it kind of caught a lot of people off guard just because everyone, with what's going on with the Iran treaty and all of this, and the possible impacts on output in crude. Yeah, the headlines are only going to do so much, guys. At the end of the day, price exhaustion is price exhaustion. We've now broken the monthly open. We've now broken the monthly opening range lows. And even if we do get some recovery, below the monthly open, I think you're at risk for a little bit deeper of a cut here in crude. Intraday, here's the interesting thing that I showed you guys last night. I don't know if this slope is in play. Obviously, it's very early in the game, but does highlight some interesting areas, okay? So first of all, you saw that deep cut below the lower parallel. The 50 line on the way down was a perfect touch of support and a perfect break in acceleration for the move. So we broke it. We tested it as resistance for 3 consecutive candles on the 2-hour chart. Move lower, acceleration through the median line, acceleration through the 50 line, maybe just an overshoot, right? Thin holiday trade. I'm not going to really pay attention to it. Long story short, on this trade, basically, as long as we rally, hold below 69, you're looking for that cut into 65, 65.50, 65 being that loose 100-day moving average. Then the 50% retracement converges on basic slope support. So nice padded region of support there for the downside in crude. I think if you do get a rebound off this, you treat it as corrective, right? You kind of want to assume this is sort of a wave 3 of something, and wave 3 out of the 5 sequence being the longest stretch. So we shall see. Do you think you get some back and fill here on this crude sell-off? But I don't think the pain is over yet. I don't think the pain is over yet. Any questions on crude? George says, if you have a chance, can you look at Euro Yen? Yeah, absolutely. Let me hit Euro Aussie for Pete. Pete, here's my look at Euro Aussie. So I know you were asking about this earlier. He says, are we still heading towards 52.30 or do we get a bounce here? So, excuse me, guys. Here's what I'm looking at with Euro Aus. So, well, I guess the daily chart kind of answers your question, but let me just show you the bigger picture stuff here, because we have been following this one. Where's my Euro Aussie chart? There it is. We have been following this one. This is my issue. Pooja, you're just on time. Hey, Mike, got here late. Euro Aussie, please, if you haven't covered it already. I'm long near 153.60, stop at 153.40. Okay, so both of you are on, I guess, opposite sides of this trade, Peter and Pooja, which makes a market. I love it. Watch, here's what I got to say for both of you. Depends on the time horizon you're looking at. So Pooja, near term, Peter, Peter, near term, I am thinking that you get some sort of bounce based on the weekly charts and what we're heading into. Okay, this is the long, well, this is the 52 week. It's not the 200 week. So it's the 52 week moving average. Historically, for this pair, it hasn't been the biggest support resistance, but even when we do touch it, it tends to be an accelerant point on both sides, right? So that converges right on the yearly open at 53.67. Okay, so right off the bat, I know we probed below it already, Pete, but 53.67 is sort of like a line that you want to be very, very aware of. And Pooja's long from that level, basically, right? 53.60. So your stop is against this low, 53.40. Okay, your stop's a little bit higher than that low, right, Pooja? Okay, we'll drill down in a minute. Keep this in mind on the weekly charts. Know it, record it, do whatever you need to do, take a picture. Feel free to snapshot any of the charts, guys, as always, with that camera button. But that's what I'm looking at on the weekly basis. Come Friday, this is going to matter, whether we're above or below this 53.60, 53.50 threshold. Daily chart, boom, looks like this. So I don't really have much by way of near-term targets at this level. Obviously, we should probably still have the yearly open there. Let me add that. Okay, obviously, just still have the yearly open there. But the bigger spot is sort of the 50 line for the lower parallel here. Now, again, as we showed you on the parallel, if you take it to that low that we made back in July of last year, it actually touches basically right now. Another reason why, George, or excuse me, Peter, I think you could see a near-term rebound. Okay. So that's that. What else? Intraday. Oh, things that are working against you, Pooja, or things that you want to be cognizant of. We're deep in oversold territory on the daily standpoint. So I like the way that you're playing that. You got a 20 pip stop on it. 20 pip stop for me is always going to be a layup. I'm always going to favor stops that tight. So Pooja, if it works out, I think you made a nice gutsy call trying to play the turn. If it doesn't, don't, obviously just let that trigger and sit on your hands, because the possibility if we do break lower from here is for momentum to really just keep this thing going on track. Intraday, this is what I'm looking at. Another reason, my comments to you, Peter, before the webinar is, I'm looking for, ideally, you get a drop towards 53 to tag the lower parallel of this formation, if not 52.12, 52.26, this region. 38.2 retracement, again, former swing highs, really nice lateral levels that converge on slope. So on a stretch play, this is what I would do. From here, though, Pete, you're getting divergence in momentum, price action making a lower low, lower low, lower low, lower low, all higher lows. So typically these long stretching ones that cross barriers of weeks, I don't really put too much credence on. But that's just to say that near-term positioning, Peter, near-term momentum is kind of stretched. It's kind of stretched. So still break down. It just, there's not that much push behind it at this point that it's already in the trade. So Pooja, what's the 53.40 level? Is there something there near term that you're looking at, like real near term? Pooja says, I was thinking of adding above 53.90 London opening range high to target 54.90 to 55.25. Adding above 53.90. Okay, so she has 53.04. Okay. Is it 53.04 or is it 53.40? I think you mistyped that, Pooja. 53.40. Okay, so it's the weekly S1. So she's working with pivots. Gotcha. Listen, as far as adding to the trade, this is just my humble opinion, Pooja. The thing that would give me conviction on adding to a trade like this would be a break and push through the weekly open. Okay, if market opens the week, pushes to a high, failure, jams it lower. Okay, the cascading effect of those shorts closing out, taking it through the weekly open, a significant level of consensus where the market's closed, that that in my mind would be where you'd want to add. Okay, so that's not to like 54.50, a little bit higher than your 53.90 level. That'd be a conviction play. And again, don't take my word for anything, Pooja. Just look at the chart. Here's your weekly open. My cursor is right on it. Once we broke below, we came right into it, and it was rock solid resistance. Right? It's exactly where that level petered out. So in my mind, a push through weekly open resistance, that would be the conviction on, okay, maybe a more significant low is in fact in play. Make sense? Peter, I think, I'm not sure if we were talking about pound Oz last week or not, but I think I already asked that and you said it wasn't you. But if you're holding shorts on Euro Oz, again, same commentary, right? If we get through the weekly open, just watch out. You don't want to get much more protective on that. Peter says, great, thanks. They're more than welcome on that. So that's number 7. So pound Oz, I do want to talk about pound Oz because it's something that we covered here in the intraday charts. And we're now into that last final target of support. Pound Oz. Here we go. Okay, so we're on that last big zone of support. So recall this thing was breaking down last week like no one's business. Pooja, I'm sorry, I missed that question. What about targets in that case? So in which case, Pooja, if it breaks through the weekly open, if it breaks through the weekly open, targets are listen, don't pay too much credence on 54.67. It was a really big level for me on the way down. It's the 1618 extension. So you saw that it was really nice support. And when we broke, it was instant resistance. It kind of loses some efficacy. So don't stress that. I would be looking for 54.98, which is the January high, and then the median line. Pooja, so determine on time, you're basically looking at like 55.40s, 55.30s for the median line. Does that make sense? Okay, might be just stretching that. So, all right. He says targets are pretty close. Yeah, I mean, you're trading a reversal, Pooja. We're coming off a pretty big level. You have to really get punched through 54.90 for this thing to be a legitimate reversal. If you're looking for wider set targets, Pooja, then look at the daily chart. From there, you're looking at 56.22. That's actually a really nice level. That's last week's high or last year's high day close for the year. It's the 200-day moving average. I mean, that would require you to break through the 200-day moving average, but the 2017 high day close converges right on the median line, which has been very clean in this pair. So if you're looking for wider set topside targets, that's what I'd be looking at. Near term though, Pooja, yeah, I mean, it's pretty tight on purpose. It's because you're fighting a pretty strong downtrend. So we want to be really cautious, really nimble until we get some stretch above some major resistance. Does that make sense? Okay, thanks. Well, be careful adding to the trade in that case. Targets are very close. You got it. Okay. So where was I? Pound Oz. Right. So Pound Oz looks like this. What do you do with this weekly chart? It's kind of messy. 7650, if you guys recall, was sort of the big first level to play, or at least that we're targeting on the downside. Bullish invalidation for the broader uptrend from the ascent from 2016 is still down at 7470. So again, you could see further losses, but doesn't necessarily discount the broader uptrend that we've been following in Pound Oz. Just wanted to give you some reference there. The weekly chart really has nothing for us to do here on this one. The daily chart is what's starting to look interesting. Okay, here's Pound Oz on the daily chart and the intraday charts. So today's chart, obviously we haven't even opened U.S. market, so you can't even call this a doji yet. But if we were to close back above that pivot at 7650, that's basically 2017 opening range highs, that would be a start, right? Momentum grounding out and turning ahead of the 30 oversold level. A downside break, very, very clear target, 70. What is that? 7470. Excuse me, the tongue twister is 7470. 38 to retracement, 200-day moving average. That's nice overlap right there. But I'm thinking you get hung up here. So for the person who was in the webinar last week and who was short on this trade, the levels that we were talking about, the last one of those levels was 75.75, and I would be out, okay, of any short exposure at this point. Here's what it looked like when we were talking in the webinars. We were trading right at this intersection. We were saying, hey, look, you could get a bounce there. There's some slope. There's some upslope support and downslope support that converged there. Did get a nice bounce. Sweet hold right below 78. Second target, 76.50. And here's that last target we noted between 75.75 and 76.12. So look, you've been marking divergence all up into that low. I wouldn't be chasing this any lower from here. Although I do like, Aussie dollar higher per se, doesn't necessarily mean that Pound Oz needs to go lower. And I think you got a lot of pound event risk out of the way last week. You got the GDP figures, you got CPI figures, you got a host of commentary from BOE officials. At this point, even from a timing standpoint, the opening range for the month broke. We made a pretty late month low. Some recovery? I don't know. Question is, do we hold here? Setting up a very clean weekly opening range. If the weekly opening range breaks to the upside, look for a break above 70 to really, 78 to really give you conviction on a little bit more of a near-term recovery play. In that case, I would just tack on a quick retracement, play the upside levels. But for me, it's all about 75, 75, 76, 12 to start off the week. See what kind of reaction we get here. With the immediate downside bias at risk above 75, 75. So I'm looking for exhaustion, looking for a move through 78 if this is going to correct. Okay, a downside break, like I said, your levels are pretty clean. Look for 74.70 on a stretch lower, and then you have that lower parallel and the 50% retracement right around there. Pound Oz, I know it's expensive pair to trade, I know, guys, with the margin on it, but the setup's been there, and it's been quite a drop-off ever since the break of the May opening range. Okay, that is number 8. Someone was asking about Euro Yen. Who was that? George, you. Got you. Here's Euro Yen. I haven't actually looked at it, man, so let's take a look and see what this thing's doing. Oh, the abomination, huh? So here's dollar yen, really quick, by the way. Um, we're obviously still involved in the swing trades there. Still looks good. I just want to point out, you know, outside weekly reversal off multi-month highs last week. Objectively, aside from Mike Boutros or Jamie Setley or anyone says objectively, it's a pretty bearish thing, right? So I am looking for possible yen strength. If this quote unquote risk off environment where traders dump yields to look for what's more perceived lower yielding assets, i.e., the dollar is always going to be a haven play, the yen is going to be a haven play, gold is going to usually typically be a haven play. If that kind of materializes even more, that's a good case for further yen strength, right? So dollar yen, I haven't really been following it intraday. I'll leave that one to Jamie because I know that he's got the swing sides covered on that, and it looks still pretty good. The only thing I did want to talk about really quick on dollar yen before I jump into pound yen, George, is this near-term structure at 108.50. Our target's open on the active swing trade, but I did want to highlight this is a decent pivot in price. Seeing a little bit of a rebound there. It's a 38.2 retracement, long dated. It's from the decline really off the 2017 highs into the low, right, of this year. So, it's a pretty decent 38.2. We saw some support there on the breakdown earlier this year. We obviously saw acceleration on the advance this year through that level, and here we are, right, with a little bounce. So watch that level, for an extended push to give you the validation for a move lower. This could give you a nice bounce here. You could start, you'll hear people start talking about a head and shoulder if we do get the rally, but still looks good, right? Still looks good for all intents and purposes. Euro yen, George, looks like this. Let's see what it looks like on the weekly charts real quick. Yeah, it's a pretty big break, right? Hmm. 24.92 seems interesting. All right, so again, I'm just going on the fly here. Looks quite interesting. Okay, so that's the weekly chart, George. Well, obviously, that'd be like your key resistance range right there. Okay. Forget this 38 too. Okay. Here's daily chart. George says, I see a break of near-term downtrend support and a retest on the 60-minute. Okay, we'll jump into that in a second. Looks like I already had this figured a little bit on the daily chart. Probably should have looked at this first. There's resistance, there's support. 100% extensions right there. I already had that drawn too. Okay, so same confluence region. So look, the break below 129.40 was big. I don't think anyone can argue that. Former swing lows, objective yearly range lows, close low, boom, break, accelerate, right? The point is, do we take a little bit of a breather here after completing two equal legs off the high? Still an oversold, so caution. A very clean, in my humble opinion, George, break of the objective monthly opening range. Here's your monthly open. You set a low, okay? You set a high, you test the highs, or this is actually not even a test of the highs. You made a new lower high, break, hold, 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 break, acceleration. Should see a late month low, getting pretty late in the month, right? Intraday, let's see what it looks like. So you're looking on the 60 minutes. So George, what are you looking at? Something like this? And you're looking at the retest? If I'm not mistaken? He says exactly. Okay. Um, Not my favorite trend line, to be honest with you. I see 2 points. You could say that's a third. You can even say that's a fourth. So on an initial stretch higher, yeah, this would be the tell, right? Look for initial exhaustion there, see how that holds. Friday's close comes in here. Okay, you could probably just dump that one. Yeah, that would be the first area to look, George. That'd be the first area to look to see a hold if it's going to move lower. Is right where you're talking about. Former swing lows, that pivot. Yeah, I could probably see working with something like that. Uh, the problem I have with this is the problem I just talked about with most of the other stretch trades, George. Is they're so stretched. Trying to fight them on the recovery, make sure you're trading nimble, lower the leverage. If it does break this, if you're trying to join in on the short side, the only way to play it, in my humble opinion, is really tight stops, man. I mean, if it spikes into this like trend line and pulls off, sure, you could try to get off a stop against that high, but like, what are you targeting? If you really think that this trend line is in play, then you kind of want to see this low break to get the drop into 123.50. That would actually be a very nice play into the weekly opening range lows, or to the monthly opening range lows, right after the break. But for me, it's so stretched here. It's so stretched here. If you're trying to see this hole to play another short, you know, just keep this range in mind. I really wouldn't get aggressive, guys, on trying to see new lows or new highs on these trades. It's just because of not only where price is, but again, because we were coming off of a thin holiday trading weekend. When you get all that market participation start to come back, you could easily see this thing again, jackknife right, test the lows again, then just rip, make that early week low in price. I'm not saying this is necessarily what I think is going to happen, but I'm just saying on these conditions, I'm aware of where my trading is vulnerable. And it's always vulnerable on the back of an extended holiday day break when price is trading at extremes. Because as soon as we get that flood of market participation back, we should get some clarity on whether market's going to continue to favor shorting this and pressing these trades into the extremes, or where there's going to be a batch of profit taking, especially heading into the end of the month. Now you start to see those flows start to rebalance. Some portfolios are all over the place. Rebalancing can really shift prices back and forth. So take it for what it's worth. I don't really like your euro yen on whole, but I would just highlight that 124.90 level in general on the immediate near term front is like what you want to be focused on. If you're gonna get a bounce, this could jackknife one more time to get and execute this. I should just add this to the chart, I guess. You could get one more drop, into this zone to kind of like jam out all the weak hands, but it's hard to trying to play reversal on anything here. Looks like a breakdown, it's plain and simple. You must have covered the euro dollar at the beginning. I'll catch the archive in that case, says Pooja. Yeah, Pooja, here's euro. I'm not really a fan of it. I was telling the guys, same thing with euro yen, right? You're trading into extremes. There's a basic trend line there off the yearly lows that someone in the webinar here pointed out. I have the median line basically where we are right now. Pooja, the weekly chart for euro. I mean, every time you highlight a support region, it sits there for a little bit and then it just breaks right through and keeps going lower. So I'm glad to see May come to an end because there hasn't been much back and forth on some of these extended plays. This would be what, the seventh consecutive down week? Last time we saw something like that was here. And even then, you got 1 week of recovery before it went lower. So just use caution here, guys. Don't think that we're going to be able to just identify the low and catch it at its point. For me, this is kind of a waiting game. Even on the scalp side of things, I've just been playing the crosses and the majors. Euro dollar, I haven't touched in a while. I mean, it's a great short from the break of the consolidation, but all the targets that we were looking for got taken out and then some. So it's hard to chase from here. Pooja says 7 weeks consecutive. Exactly. Yeah, it's getting absurd. But remember, wise saying: markets can stay irrational way longer than we can stay liquid. Right? So even if things seem like they don't make sense, like it's just absurd, we're stretching, it can stay like that, way longer than we can stay liquid. So we want to make sure that we're maintaining discipline. Also, the major things that you want to keep in mind also this week, guys, are crude. This is really, really big stuff, especially on the back of all the economic, the geopolitical turmoil that we're seeing and all that event risk out there. This is pretty big. Okay, sizable $5 move in crude is not something to take lightly, especially in the speed and the breadth of which it happened. So we'll continue to track that one very closely. Pete wants to take a look at gold before we go. Pete, here's gold. Look, we were bullish off of 1285, right? So this is where we highlighted the gold update last week. You got a little deeper pull into 1282. But it held. Okay, the first level of resistance, the first target on the way up was 1302, 1301. We talked about that at length. I was really encouraged because we pushed through it late last week. We pulled back. We offered some support there and pushed higher. Now this kind of has me a little bit more concerned. I do think you could still see sort of one last leg lower, but above 1285, I still do think gold has a bigger play at hand. Here's gold on the weekly charts, just for your information. Okay, this is a big support zone. And this is why 1285 for us was the first level to start looking for some long side exposures. A basic 618 from the advance off last year's November lows, or December lows, excuse me. You have that swing high right here at 1295. Really nice pivot. Resistance, 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 break, acceleration, break, acceleration. Messy on this resistance, but resistance and acceleration yet again. It converged on the 52-week moving average. On a close basis, we closed right in that zone. So for me, it's all about clearing 1302 to the upside or 1285 on the downside. For the weekly charts on gold, this is absolutely paramount. Okay, and the levels are clean and they are clear. Okay, so we want to see either a weekly close above 1302, looking for the correction in that play, 100%. Also keeping in mind 1302 is not just the yearly open, it's also the yearly opening range lows. Opening range lows, support, break. It's been resistance for the last 2 weeks. So it's all about 1302, 1285 on a weekly close basis. And, again, my humble opinion, I'd love to see dollar pull back and get a little bit more upside in gold, looking for 1315, 1313 would be your next upside target. That'd be 38.2, basic 38.2 retracement of decline, but also the objective monthly open. So how beautiful would it be to get a monthly doji in gold after tagging support? I mean, that would be like super bullish. But we have to get there first. First things first. week, but basically